Yo, yo, yo. Welcome back to the channel. I know this video is a little late, but I was running around. My mom is in town, so visited with her, stuff like that with the family. But yeah, so just wanted to break down AMC, and it's been a while since we've gone through like actually doing a full on analysis. So we can just do a full breakdown. If you're new to the channel, the main things that we've been watching for the long term, and I know that I haven't talked about this in a while, so it might be good to refresh everybody on one of the main things. Obviously, we have this historic bullish trend line that you may or may not say that we've confirmed at this point. And again, the points don't have to be exact, but here, look, there you go. All right, there you go. So you have multiple touch points back here in January, and now you've gotten this price recovery. Another way you could look at it this way, and this has kind of created a bull trap scenario, perhaps. A bear trap scenario. I apologize. But yeah, so you have this, and then you also have this channel that has kind of been created because you have this top end resistance. And this resistance actually goes back a little bit more historically. If you drag this line back here, you can see that this line on the logarithmic chart has actually behaved as support in the past for a very short amount of time. Well, let's see. Yeah, very short amount of time. But it was kind of like it created an uptrend back here. And now to see it behave as resistance. So pretty interesting stuff. So yeah, that's pretty much your logarithmic channel that's going on with AMC. If you're looking at AMC from a long-term perspective, I believe that you had basically a double bottom here. And then you created a 5-wave sequence up, you ABC'd down, and you actually broke below the support of your double bottom. So this is like a true bottom, right? In Elliott wave. You could also say maybe that there was a 5-wave sequence in Elliott wave that occurred here. So let's do a measurement of this retracement level. Yeah, I don't know. I mean, you'd be pretty close here, but you'd have a 5-wave Elliott wave, ABC down. You trade it sideways here, 5-wave up, try again, get rejected, double top. You come back down, double bottom. You get rejected down again, and then you create a new bottom. And so the reason that I'm bringing that up is because it does interface with the reality, or at least, the reality, in my opinion, is that we are going into wave 5 of a macro Elliott wave. So what I mean by that is you take this bottom here, you go up to the top for your wave 1. Then you have your corrective wave down, wave 2. This was a 786 retracement. How did that happen? Hold on. I don't know how I clicked twice like that. Anyway. Wave 3 was up here. Wave 2. And then you're gonna, to me, you bottomed out here at this $28-ish level. And I know on log, I think it might actually show this as lower, but yeah, so you have pretty much a wave 5 coming, and what the price target of that is going to be, we would determine the same way that we determined what the price targets would have been in the previous sense, which is the Fibonacci extension tool. So if you do a trend-based Fibonacci extension where you draw a line from the bottom to the top of a move and then down back to the bottom, and then the bottom was here at the 786 after the buy button was taken off. You can see the 3.618 Fibonacci extension was able to predict the top for AMC here in June on its run up. And so what I would say is, if I was to do a similar thing to get these sorts of price targets, I would do the same thing after the January run up to the June run, down to its bottom, and then this is where you start to get into a correlative territory where you want to start making some correlation, right? So because we have this upward trend line resistance, perhaps you would want to say, okay, well, historically we've hit this one twice. We've gotten rejected by it. It also acted as support back here. So it's reasonable to suspect that maybe we'll interface with this again if we were to have an upward move. And again, I'm not guaranteeing an upward move. It's possible that we have a downward move, right? We could break below this channel and then consolidate. Overall, I'm bullish, and I think that we've seen a bottom on this move. But, you know, obviously there's a bearish take to have as well. But yeah, so we would want to have some sort of correlation with that. So what I would say is, like, you know, you want to find, like, maybe in the next few days, maybe like you would say from here, maybe middle of November, if it were to peak in the middle of November, you would hit this sort of $350-ish range per share. If you were to correlate with this Fibonacci extension, that would bring you around this 4.236 Fibonacci level, which is $313.31. So perhaps that would be a stopping out point. And if that was the case, then maybe you would start to create more of a rising wedge pattern rather than this channel. But obviously it would be a more long-term one. Now, does that mean that this is guaranteed? No, of course not, right? Again, I said that we could go down. And all trends are meant to be broken. But because of the Elliott wave, because of, I believe in Elliott wave theory, and, you know, personally, not very often you see something that has this sort of motive not go into a 5-wave sequence. So it would be kind of strange to not see a 5th wave, just put it that way. So I'd say that, like, maybe from a minimum, like, you know, I don't know. I mean, you would expect the wave 5 has to break above the wave 3 if it is a true 5-wave Elliott wave. So the minimum kind of expectation that I would have is, like, maybe you would go to this $81-ish level. Maybe you would go to like 95-ish. But personally, the way that I'm looking at it on this next run up, and this isn't financial advice, nothing in this video is, but whatever you want to do, it's your money. You do what you want to do with it. But you know, some key levels that I'd be kind of looking to see if there is some selling happening would be at the 1.618, 2.618, 3.618 would be like the major resistance, because we didn't surpass that on our previous run. And then I know a lot of people are interested in MOAS, that sort of thing. Obviously, that sort of thing is hard to predict through technical analysis because it requires a lot of things that may not be involved in this chart. But I would imagine that if that were to come into play, it would be the sort of situation where you were to see actually a break above this channel, and maybe you come back and retest it, and then you were to continue higher. Now, if this happens, if you make a higher high after you break this channel and retest it, I mean, you're gonna be in a state of FOMO that, I mean, maybe I probably have never seen personally. The sort of emotion surrounding that sort of scenario would be something that we would talk about for a while. But yeah, for the purpose of this video, I don't really want to talk about that too much. So I know a lot of you people, what am I, a teacher? I know a lot of you guys clicked on this video. Why is that so different? Why is me saying you guys so much different than you people? I guess, I don't know. It sounds a little bit more casual, doesn't it? I know a lot of you obviously have been watching AMC, especially the people who watch my channel. I've been watching AMC and through a technical lens for a while now, and so you are probably wondering what I'm thinking about this move and what happened today. From a cycle theory perspective, right? If you're familiar with cycle theory, I would say that, like, from a price movement perspective, if you're not familiar with cycle theory, I can show you sort of what I'm talking about just briefly, but let me see how I want to do this quickly. So let's just do it relatively quick and say this region of the chart and this region of the chart are correlated. If you flip this part of the chart upside down and you put it here, it actually matches up almost perfectly. Don't ask me why that's relevant, but it is kind of weird, isn't it? And then more recently, and we'll just focus on this for now. this region of the chart and this region of the chart have a very distinct correlation with each other, very common bottoms and tops. And then now it seems that we are in this region of the chart, which is very similar to where we are now from a price action perspective, right? We've seen this turnaround. A lot of people would say sort of out of nowhere, right? And so what I will say, and I don't want to be like out here being negative and stuff like that. Everything that I see seems to be correlating. But if I was to look at this and not look at it from a cycle perspective, this candle does look reversally to me. This is a doji candle. I can't remember. It's a long-legged doji, I believe. And normally this does produce the end of a trend, right? So like basically it's a signal of the end because bulls push the price up and then were rejected down by bears. Bears might have gotten euphoric here and tried to push the price down, but then were rejected by bulls. But it still stands like, okay, we've got some major indecision in the market. But if you look back, a similar doji candle occurred here, and we did have a continuation afterwards. So, I mean, I'm gonna be honest with you guys. You know, like my stance on this play was mostly technical, especially when I started the channel, and even before that, I was always looking at it from an emotional, technical analysis perspective. But you know, you have to adapt to your environment. When you see the similarities in this chart that I see, and I can't unsee, you know, I can't not see them anymore. You sort of are gonna start to go, okay, well, it does seem that there is a cyclical nature to the chart that's obvious, right? It's a pretty obvious thing to say at this point. It's just, in my opinion, it's completely undeniable that this thing is being traded cyclically, and it's doing the same thing that it's done in the past. And so, does the past promise the future? Absolutely not. But what I will say is that my expectation for this, and again, not financial advice. Don't make any decisions based on what I do. Do your own research. Follow a bunch of people. Watch a bunch of YouTube videos and try and come to your own conclusion, whatever. Maybe get a formal education while you're at it before tomorrow's trading day. I don't know how you will because it's 11 p.m. Central. But I just can't help but look at this chart and say, man, like this is the same. It's the same move. And because of that, I just think that bullish institutions are in control of the price. And I do have further evidence of that. I mean, we've talked about Wyckoff theory a ton on the channel, right? So this was the Wyckoff accumulation schematic that occurred before the run-up in June. And basically, this is if you're not familiar with it, it's basically a theory that encapsulates the institutional trading strategies. And you have a selling climax, and then an automatic reaction with a sell test and a sell test in phase B. But basically what's going on here is this is institutions accumulating an asset before they eventually do a markup phase where they have a sign of strength above the trading range. You can see these blocks create a trading range like of resistance and support. They eventually break that, see what kind of volume comes in, see how the volume strengthens. They sell off to get a last retest here, see if the volume's dead. If the volume's dead, they pick it up, and then they send it for a markup. And then they distribute here. So you can see that volume was very strong on the run-up here. The price came back down, and then they came up for another test. They saw volume weaken. They said, okay, we're dumping this thing. And basically, they just traded people back and forth. They exhausted retail until they dumped the price down here. And then I believe that they began another accumulation. You can see here, it's very similar. Sell climax, automatic reaction, sell test in phase B. You have basically your automatic reaction up here in phase B, followed by a last point of support, and I believe that the next thing that you're going to see here is a sign of strength. You've seen volume begin to pick back up here. It's still not extremely strong, but you're seeing these bigger moves. And another thing that I really want to point out too is that let me go to the 4-hour chart to show this. In after hours, extended hour trading, we've actually seen an uptick in volume, which volume is usually like non-existent. You can see in between these trading regions, you have no volume. You actually had volume in the after-hour sessions, the last two, which is really strange, by the way. Like it's not a normal thing. So yeah, I mean, to me, I think that overall, what you're looking at is you're seeing the cycle play out, and that's basically my conviction. I until I see something that breaks this thing, because we've been following it since here, and I know Astro has been following it since like he kind of popularized it back in May or June, and was calling for this run in June back in May. You know, but really since here, this September to October, we've been following the cycles very heavily on Twitter. A bunch of people that I respect and have grown a relationship with, they're following the cycles, and I mean, it's just hard for me to see this, and I've watched this entire move play out in this red region as well as this second yellow region here, and play out exactly as it's played out here. I mean, it's unbelievable. Here, I'm gonna do this in like hot pink or something. This region here, I mean, I'm sure a lot of you guys who are watching this video really remember this, but this region was an incredibly fearful region, you know, like we were at peak FUD, as people would say. I know a lot of people in my community were pretty comfortable with the price movement, because I was pretty much calling for it the whole way through. And I'm not patting myself on the back. I'm just saying that like our experience might have been a little bit different, but you know, it was a rough region for the AMC community, and then you would, out of nowhere, you just see this move right back up, you know, and for that to happen the way that it's happened, as explosively as it's happened, it's not, you know, it's not something that I'm looking at and I'm thinking, okay, this, you know, this cycle thing isn't real, right? I don't know. If anybody's saying that, I just think that that's kind of, at this point, it's a little silly. If you're saying that it's completely false, it's completely something that we should ignore. Esther Nayfield would have said, at Esther Nayfield on Twitter, would have said it's a bad day for people who don't believe in cycle theory. It's definitely been like that lately, based on my opinion. You know, in my opinion. But yeah, so if you want to see what that looks like, you know, from, I mean, if it just continues, which obviously it doesn't have to, but if it does, you know, you would have something like this here, right? This matchup. Obviously, I just have to adjust it a little bit for scaling purposes. This region of the chart, very similar move here. And then here, you know, pretty similar stuff. And then here, and again, none of this is financial advice. You make your own decisions, do whatever you want to do. It's your money, do the right thing. But you know, if you correlate that with all the things that we've talked about in the video, the Elliott wave, everything like that, you talk about the sign of strength where you can break above the trading range and then establish support on that resistance region, and then you have your markup. I mean, you know, it's pretty convincing stuff. And you know, I'd be lying to you if I said that I wasn't excited and I wasn't looking forward to it. The only thing really that we're looking at that looks negative, or like it goes against any of this this stuff that I'm talking about, is literally this one candle, this long-legged doji that broke into our resistance region that was established back here, and you know, we broke back down. That's pretty much it. And so, I mean, I'm not here to make decisions for anybody, but I'll tell you, you know, personally, I feel like this is a pretty good last point of support. And then we're gonna we'll probably see some volume come in tomorrow. So that's what I think is going to happen. That's my opinion. I could be totally wrong. We could break back down, and then if we do, then it is what it is. But I do also want to point out that this is a good Fibonacci retracement. We'll find our level here. Let's see. We broke as low as the 0.5 Fibonacci based on this. Yeah, a little bit below it. If you pull it from here as well, you can see clearly that it's at the 0.5 from this further move back. But yeah, I mean, you can pull it from here. You get kind of the same result, and then just for comparisons, it's late, guys. Give me, don't be too tough on me. But if you wanted to do a comparison, I'd say that most similarly, you'd pull it from here to here, and you can see here that we wicked down below the 618 for a second here, but we ultimately found that support at the 0.5 Fibonacci. So, I mean, these charts, if they're not twin brother and sister, they're definitely related. They're definitely correlated with each other in some form or fashion. So, what's going to happen next? I mean, I guess it just depends, doesn't it? But in my opinion, I think bullish institutions are in control of the price, and their interest is to get their final bump up here, get some confidence in the market, load up in this resistance region, just like you saw back here. So, and this is closing out, but basically they want to have this sign of strength. Make sure that the market gets excited. We see some volume come in. And then for them, they're going to want to sell off, create a sell off here. Low volume. If they see that low volume, they're going to load up here for a little while. Just depends. And then send it. And then, yeah. So that's kind of what I'm expecting. I would expect that tomorrow you see a move. It makes sense. Makes sense for us to see a move here. And then maybe for a couple days we come back and we do this little thing here, and we might be coming to the end. So that's my take. Hopefully you enjoyed the video. Hopefully you gained something from it. Hopefully you learned something. I know that it's been exciting times for apes, and I'm glad that everybody's feeling excited about the price action lately. I hope that we don't get surprised by anything here, but pretty confident that we won't. But obviously that remains to be seen, and we'll see. So you guys have a good rest of your night or morning if you're watching this in the morning. And follow me on Twitter. My Twitter is in the description down below. You can join my Discord. It's free to join. We have a bunch of great cycle theory people as well as technical analysts in that group. So you go check that out. Yeah, follow me on Twitter, and yeah, we'll keep up. We're gonna keep talking about it as it goes along. And if anything changes, then we're going to talk about that too, and then maybe we'll go back into our technical analysis bag instead of doing this cycle theory stuff so much. To me, I'm completely blown away by the cycle theory stuff, and it's just crazy to see it play out the way that it has. But you can see here that we spiked up here. We had this little pullback, and then we moved back up. I mean, it looks really similar. The past doesn't promise the future, though. But yeah, so hopefully you enjoyed the video, and until next time, make sure you follow me on Twitter. Peace.